What's up, guys? Hope you had a good weekend. So as always, we'll start with the weekly trading calendar, highlight any economic data that we have coming up, any good earnings reports that I think are worth noting, um, and then we'll get into some individual setups. So let's look at economic data first. Monday, nothing too important. Um, Jolt's definitely going to be good to look at. Tuesday, jobless claims Thursday, that should be pretty important to look at. Non-farm as well on Friday should be important. I like putting in all these other little pieces in case you do see a reaction. It's always good to be able to see what could have caused it potentially, but I wouldn't get too caught up in everything else. Earnings, Palantir, AMD, Google, Lilly, PayPal maybe for software. Amazon's going to be big. Uh, yeah, just some of the bigger names reporting earnings this week that I'll probably have a little extra focus on. But nothing too crazy. I think economic data should die down a lot next week. I know last week and this week was pretty crazy, but yeah, just so we know. So Tuesday, Thursday, Friday, bigger economic data days. Um, so first we'll look at we'll have an overview of the ETF. So we'll look at SPY, QQQ, and IWM, and then we'll get into some individual setups that I'll be watching. So SPY had a good close last week. You have 9MA still coiling with the 21. Volume wasn't volume wasn't keen on Thursday, but Friday followed it up with some decent volume, closing back green. But I'm viewing this as tried to break down, tried to crack under the MAs, tried to crack the monthly level, couldn't. Tried to break down on Friday, couldn't. Um, but you do still have an inside day on this Friday bar. Lower lows, lower highs. Let's see what it does throughout this week. But ideally, SPY holding over 690 with those moving averages would be key for it to just keep this trickle up going. If it starts losing 690, you could say Friday's lows. Starts losing Friday's lows, chill a little bit. Under the 9MA, not really looking to go aggressive for longs. Um, so yeah, 690 or Friday's lows, kind of a big line in the sand for this week. Let's see how that lines up with QQQ. Yeah, similar action. So you could say, SPY's under 690 with QQQ under 619, maybe even under the 50MA. You chill. You definitely chill. Increasing volume, always a sign to slow down. But yeah, let's see the reaction on those. And then always good to follow IWM just for a small cap idea. I can see this monthly level I haven't marked up. Let's tag that. Let's go back. Let's see if we're missing any monthlies. No, we're good. Maybe get a quick weekly in there. So my weeklies I'll always color pink, red, whatever you want to call it. My monthlies will be purple, and then my blues will be my quarterly levels, just so I kind of have an idea of which level is which, what's the stronger levels. So obviously the monthly levels or the quarterly levels, my bad, will be the strongest. So for example, right here, it's a great back test on IWM. Honestly, not that bad for a trade entry either. If I'm willing to get an entry near 258, wouldn't be bad to try it for a play back over the 21. Then you're targeting 265. Wasn't on my plan originally, but I'll watch it. So, but again, IWM, good line in the sand there with SPY and QQQ. So it was QQQ 619, SPY, what was it? 590, I believe. 690. Yeah, 690. QQQ 519, 619, 619, SPY 590, 690. Wow. IWM 258.20. All right, not bad. So you see those failing together, you could go short if that's part of your plan, but that'll be a good line in the sand. But yeah, let's get into some individual plays. So I've broken them down into kind of how the setup is and the strategy around it. So we'll have I'll show some mean reversion plays first and how I'll set them up. There's a couple second attempt breakout plays that could be setting up. There's a few, level reclaim plays that could be setting up, and then there's a nice bounce play as well. But I figured breaking it down like that might be a little easier to understand. So I do want to show AMD though. AMD, I'm not going to be trading just because of earnings coming up. I believe that's Tuesday, so no reason to trade it. But again, just mean reversion real quick. Anytime you see a clear high and a clear low, you have a Fibonacci retracement, aka a mean reversion play set up. So as I'm looking at this AMD, broke down, clear low, good volume increase, clear high as well off of a key level. So the really key things you're looking for on a mean reversion trade, I don't know if you noticed. So first of all, 0.618, that's the golden Fibonacci retracement. That's a very important Fibonacci retracement. 0.72 and 79 Fibonacci retracements are also, nearly as important in my eyes. And I honestly tend to see those get tagged a little more than the 618 level. So anything in here though, so let me just do this. Anything in here I would consider, the golden zone, the ideal entry for anything like this. So you can say right here, those are ideal mean reversion entries using the Fibonacci levels. So again, 0.618, 0.72, 0.79. But the good thing about this AMD trade, and I'm almost a little annoyed it has earnings because I'm not going to take it until after Tuesday. But if we can get a test of this, this 213 or sorry, 213.90 area, 214, not only does that align with 0.79, but it aligns perfectly with the quarterly level. So you get stuff like that. It's added conviction for these types of trades. So after Tuesday, depending where AMD does, maybe even if it gaps down, it's worth a shot on that Fibonacci retracement. I'm expecting them to do beat the numbers, have a good report. So I'll make sure they do that. But 214, you have Fibonacci, end of quarterly, stuff like that. Great conviction trades for a mean reversion setup. So AMD is just one to note, but again, they do have earnings, so they're not part of my plan per se just yet. LIF, Life Sciences, you have another one. So gapped up, filled the gap, tested 0.79. Here you're kind of just waiting for an entry. So if we were to come down a little further, make sure the spreads are going to be good on this one. If you are taking calls, this one might have a little higher gap. I know it's probably not as volatile as some of the other ones, but you have a clean structure down. Decent volume on the way down, but still decreasing. So you have a decent structure down, held 0.79, closed at 0.72. Ideally, you're entering somewhere in here for the upside. Some would say that's more risky, but ideally 79 fib is going to be your stop loss on all of these. So the closer you are to 79 fib, the bigger your risk to reward is. You can target 72 with ease, you could target 618 with ease, and your stop loss is going to be tight. So just something to know. Ideally, you're entering as close to 79 as you can, and then you could assess your risk from there. It's not bad to enter at 0.618, but you just have to understand, okay, if I enter at 59, my stop loss is 3 points away here. So you need to understand that from a risk to reward standpoint. Your loss is bigger, don't size as much. You get an entry down here, okay, sure, size full. You have a tight stop. So LIF, one to watch. And again, clear low, clear high. That's an established range. You mark that up and you wait. Next one. So other than life, we have OKLO, which is still a good energy theme. It's kind of getting beaten up a little bit, but you have, again, clear run up. So let's get that. Clear low, clear run up, clear high, kind of a trickle down in volume, not crazy. But again, tagged 0.79 here. And again, I don't know if you notice, there's a level hidden behind there. So another area, 0.79 Fibonacci lined up with a monthly level. That's extra conviction right there. So ideally what I'll be looking for with OKLO, can we get back over this 80-42 area and hold it? So maybe any reclaim, if it's too aggressive, maybe I'll wait for a reclaim and then a back test, see if it holds again. Um, if it opens underneath, chops around, stays tight, and then breaks up, I'll probably still take that off of a 0.79 fib. And then, if you do get an entry, ideally I'm entering right around 80.42 if I take that entry from underneath. And then your stop losses, simply those lows from Friday. That's the simplest way to do it. Tight stop, good risk reward, and then you're targeting, either the next Fibonacci level, or you have 85.35, 5 point range. Is that another level hidden behind this as well? No, it's not. Yeah, so you technically have a 5 point range until real sellers come in, but sometimes it might tend to respect Fibonacci levels. But over 80.42, I'll be looking to go long on OKLO, see if it respects that mean reversion. One last mean reversion. This one's quite aggressive as well. Yeah, and it gave you the tag on Friday. So AVAV, you have a big range here, 240 to just over 400. Again, decent volume. I like the decreasing volume here on these aggressive. I would consider them aggressive bars to the downside, but good decreasing volume shows me sellers might be a little done here. So you add the decreasing volume to the fact that it's fallen 130 points in the last, I don't know, 4 or 5 days. So, again, just in terms of a risk reward standpoint, that's in your favor in terms of the price action, slowing down volume. The only thing you really need to wait for here, just to be a little safer, you got the Fibonacci test. You do just have a heavy quarterly right here, and it could get smacked off of it and come right back down. It's still a 7 point upside. I don't think the contracts will move that much on AVAV though. So I might actually wait for a 285 test. And then, maybe it comes up, test 285, again, tightens up underneath, and you get that breakup. Once it tags 0.79, I'm not really keen on looking at fibs for targets, maybe 0.618. You might see some rejections there. But these quarterlies are still going to be a lot harder than any fib range, ideally, unless it's something through all-time highs and it needs a Fibonacci level. For example, really quick, ASTS, it has really no information to go off of here except Fibonacci's. So that's another case scenario. But AVAV, when you have quarterlies and monthlies around it, you want to respect those first. So ideally, I wait for an interaction here, and then we'll see. But those were the mean reversion trades. Let's go into second attempt breakouts. So the first one's Google, but again, looking at the earnings list, we know that Google has earnings on Thursday, so not going to trade it. Premium's going to be inflated. I might catch a premium inflation on it until Thursday. There's potential. There's potential I take this on Monday, depending on how aggressive it looks. But ideally, this 340 is a great area, and if you're looking at any daily chart, Google's the liquid leader for obviously Mag 7, but you could argue the market. I mean, the structured bases, the clean breakout, structured base, clean breakout, structured base again, riding the moving averages, tight price action. I mean, it has everything you need to show you that it's probably going to go higher. Again, earnings can do anything though, so not going to trade it. Potential I go light if I think it's really good, and then try to ride it into earnings, but I'll definitely be out before earnings. Unless the trade goes 100% and I'm able to roll up, but we'll see. Another second attempt breakout we have here. This might not set up this week, but you have CSCO making a good right side. This little, let me just show you this little formation here. When you see this in stocks, so run up, kind of big liquidity sweep down, and then that kind of direct U-shape reversal back up. Ideally, what a lot of stocks will want to do if they're ready to go, they'll give you that little base here and they'll break out. And this breakout is usually pretty consistent. It depends on how well it builds this right side, but ideally from CSCO, tag the weekly, tagged it multiple times. You saw when it broke out, it tagged the next weekly and ran to those highs. But ideally, you get a little bit of a base here. Moving averages are all coiling up, but it's a little far from the 9MA. So ideally, you get a base. This 9MA catches up a little bit, and then this break over 79.50. To me, after these 5 tests here, that's a little structure change. If you could be as safe as possible and kind of wait for a break above, and then it back tests 79.50 maybe, and then really breaks out. But to me, the next time this gets over 79.50, it looks like it's ready to make a little move higher. I don't know how far, and I don't know how aggressive Cisco has moved in the past, but it seems like, 100 would come pretty decently. We'll see how these earnings accelerate, but interesting play for options. Might not happen this week, but good to watch. One other one too. Spelled that wrong. Apple. So Apple had a good, decent reaction after earnings. Typically in the past, it's actually had a pretty big sell-off after earnings, so that's already one thing to note. But no, Apple was weaker in that Mag 7 area. Finally tested a key quarterly at 243, held, reclaimed the 9MA last week, finally tightened up, and then you have a good increase on volume here, trying to come over this 21MA, but mainly this 260 area is going to be big this week. So ideally on Apple, depending on how the market opens, if we do open underneath 260, again, wait for that price action to tighten up, and you take that second attempt through 260. And ideally your stops, you can run stops around this 254 area. I would argue, that's kind of that weekly average low from last week. You could use 250, but I'm not going to use that. That's a little too far. So we'll see. But if Apple bases here, develops a level over or an area over 257 and then breaks out, maybe 257 becomes stop loss. So we'll see how it acts. But 260, that interaction, I'll be watching, see what it does. If you want to be safe, 262, you have a double top here, actually almost a triple top. So, clearest trade here through 262, you can use 260 as your stop loss. Ideally, I kind of want to get in before that. I think it can go. With Google earnings, it's not really a direct correlation, but with Google and Amazon, you get a little more focus towards Mag 7. So we'll see, but I'll keep an eye on that. All right. So the next setups we have are a couple reclaim plays. So what I mean by reclaim is, so VRT, take for example, developing a good right side here, tried to get over 192.86, couldn't hold, came back down to the 9MA. If this gets back over 192.86 and can get back up to the, I would say the upper third of this larger candle on Friday, that's more often than not probably telling me it wants to go to 202 before it can fail at 192.86 again. You can look at a decent entry on VRT here in terms of where it is in the 9MA. 1, 2, 3. Last 3 interactions, you had a pretty decent buy off of it. The only argument is those buys seemed to be pretty quick intraday, and you kind of had to sell off all day into it. So that action on Monday will be key. But I do have a position in VRT, kind of since this breakout right here. So let's see if I can just mark this quick. Right here, this kind of trend line crack. So I started my position in VRT right when it kind of started following through. So I'm not too keen on being aggressive on options entries, as I already have something working for it, I guess you could say. So I'll probably wait for that 193 and then see if we get that push to 202. But that's what I mean by reclaim. Couldn't hold it, aggressive more underneath. If it does get through, that's going to show me it's got some strength in it still. GEV had a monster earnings report, so that's the big thing to know with this one, and that's why it'll probably be on my focus list for the next couple of weeks. This isn't the high. I know it hit higher after market, but not really the focus point right now. So what I mean by reclaim on this one, big wick, big range to 752, closed under this key quarterly, that previous all-time high where it developed a good base. So if it does get back over that 731 area, good spot to long it. You have a 20-point range to the upside, And then I know there's even higher after that EPS report. So, still 20-point range on GEV, that can pay pretty quickly. And their EPS report was phenomenal. So with that backing it up, they have every reason to run. And I wouldn't see dips. I wouldn't see dips not getting bought up for the next, honestly, until they report earnings again. So just something to note. WDC. WDC is kind of like VRT, like it's been riding the 9MA. You can argue this is a very similar candle to this, but you can also argue, the volume's pretty bonkers here in terms of where it's been in the past. But yeah, like VRT, these candles are just weak. They're very weak. So I'm not really looking to go aggressive off the 9MA. But if you lower this time frame, let's see. It has a good hold of the levels. Ideally, this 250 is going to be a good line in the sand for WDC. Their earnings were good. SNDK earnings were phenomenal. MU has been phenomenal. So we really just have to see this 250 interaction. Um, that's also something to note though, really quick. If WDC reported what they reported, consistent beat. Let's just look. So that's their EPS trend right now. Another consistent beat. And if you were to look at SNDK, a massive beat, a massive beat. So you have to look at it like, if they don't buy this up on Monday, if they're not buying memory right now, and by they I just mean people. If no one's buying memory right now, they're probably not going to buy anything else. There's always a theme in the market. If they're not buying memory, it's because if they don't trust the market, and if they don't trust the market, they could be buying defensive stocks. I'm not saying money's just going to get taken out of the market and not go anywhere else, but in terms of how I trade with momentum stocks, growth stocks, high earning stocks, if they're not buying SNDK, MU, WDC, you know, SPX, QQQ, they're going to have a hard time going up. Maybe money moves to Mag 7s. I don't know. But, it wouldn't be a good sign for the market in terms of losing faith after such a quality report. SNDK is supposed to double their revenue again next quarter. Sorry, their EPS. And then they still said that's not the end of their acceleration. So to me, this is a $1,000 stock, and it's almost a no-brainer. So if they do sell it off, number one, don't take your eyes off of it. But number two, they probably won't buy much else. So WDC, VRT, that's why I'm just being a little hesitant here. I'll watch this 250 reaction. If we do get a good push up off of it on a quality reclaim, I'll take it. But not looking to go aggressive. Another one was BE. So I did add BE on my position account with VRT. So those are my two holdings on my position account. What I really like here though is this hold. So you had a really heavy resistance at this quarterly, this previous 147. Big downtrend, multi-month downtrend, multi-month base, I should say. And then you have a China base above it right here. And you had a really good tag off of it on Friday with the hold of the 9MA. So the reclaim I'm looking at here is just that weekly level above. So if it does get back above this 156, you have some wicks at 160, 161. It wouldn't be a bad area to take off something. But ideally, you could get that 167 test again for all-time highs. I'm looking at this too. All these really good volume spikes are still on green bars, so it still shows me there's good accumulation there, and it definitely has potential. So riding the 9MA. Let's see if we can get back over this weekly, and it's got a good range back to the upside. So the last play that we have is the one and only ASTS. So let's see. What I'll be looking at here is for this is the bounce play. So 102.79, top of the fib range that I had marked up, and then these are the Fibonacci extensions. It's clearly still respecting this Fibonacci extension. So I'm going to leave it. But 102.79, back tested here and held, gave you a decent bounce. If we get another aggressive pullback and it hits 102.79 again, and it's still over the 21, and the volume's not totally aggressive, if this bar comes in and cracks right through it, and this volume's already higher than Friday, okay, then you chill. But if we do get that test at 102.79 again, and that volume shows me anything of sellers decreasing, I'm gonna probably look at these 120 calls again for probably a few weeks out. Not sure how long. Probably within the month though. Um, but it's a good shot. 21 MA's had more aggressive bounces in the past than the 9. This run right here was quality, but again, 21 MA has been good in the past. And then if you do get that crack under 102.79, honestly, in my opinion, to just chill, and then we see where it wants to go from there. And I'll probably still look to sell puts and develop a position in this one. But yeah, we'll see how this one acts at 102.79. Might not get there. Might get there quickly. Might get there Friday. Who knows? But yeah, those are all the setups for today. So not much, but a couple mean reversion trades, couple second attempt breakouts, couple level reclaim trades, and then a bounce trade. Yeah, hope you enjoyed.